So let's talk about Visa. I mean, pretty much all of us have one or we've definitely used one. We tap, we swipe, we buy things online, but behind that super simple action is this global giant that honestly most of us don't really get. So today we're going to pull back the curtain on the company that's basically the world's financial toll booth.
All right, here's how we're going to break it all down. We're going to tackle this in 4 parts. First, we'll bust a huge myth about what Visa actually is. Then, we'll get into its business model with a really simple analogy. After that, we'll look at what makes that model so darn powerful. And finally, we'll peek into the future and see what's next for this payments titan.
Seriously, think about it for a second. That little piece of plastic, with the blue and gold stripes, it's one of the most recognized brands on the entire planet. But what it actually does is probably one of the biggest misconceptions in all of finance.
Okay, so let's just start right there. Let's clear the air and tackle that big misunderstanding head on, because this is probably the single most important thing you need to know to understand their whole business.
Yep, you heard that right. Let that sink in for a moment. Despite what almost everyone believes, Visa does not issue credit cards. It doesn't lend you any money, and it doesn't set your credit limit. All of that, that's your bank.
This table right here just lays it out perfectly. Over on the left, that's what we all tend to think, that Visa is the lender, the one giving you the credit to go buy that coffee. But the reality, on the right, is that Visa is a technology company. It just operates the network. It's the secure system that lets your bank talk to the coffee shop's bank like instantly. They don't carry your debt. They just skim a tiny, tiny fee for making that connection happen.
So, this brings us to the absolute best way to think about Visa's business. If it's not a bank, then what in the world is it? Well, it's a toll booth. Let's look at how that works every single time you pay for something.
Think about it this way. A toll booth on a highway doesn't own any of the cars, right? And it doesn't care where they're going. It just sits there on that highway and charges a small fee for every car that needs to pass through. Visa does the exact same thing, but for money. It sits on the giant global highway of commerce and collects a tiny fee from billions and billions of transactions.
You see, every single time you buy something, there are these 4 key players involved. There's you, the cardholder. There's your bank, the one that gave you the card. Then you have the store you're buying from, and of course, they have a bank too. Visa is the critical piece of infrastructure that sits right in the middle of all of them, making sure the message gets from one side to the other safely and instantly.
And this is exactly what happens in that split second. When you tap your card, boom, that signal goes to the store's bank. That bank immediately pings Visa's network and asks, hey, does this person actually have the money? Visa instantly routes that question over to your bank. Your bank gives a yes or no, and Visa carries that answer right back to the terminal at the store. And all of this happens in like less than a second. It's incredible.
And for providing that amazing split-second service, Visa gets to collect its toll. It's not actually just one fee, it's a few different types. They get service fees, which are based on how much money you spend. They get data processing fees for every single transaction, no matter how small, and then they get these higher margin fees whenever you use your card in another country. Now, individually, these fees are just fractions of a penny, but when you multiply that by trillions of dollars in transactions, well, it adds up to a whole lot of money.
So you might be asking, why is this toll booth model so insanely successful, and why is it so hard for anyone else to compete? Well, it really boils down to 3 main pillars that create this massive, massive advantage. First up is just sheer mind-boggling scale. Visa's network is literally everywhere. We're talking over 200 countries and territories. So whether you're buying a coffee in Cairo or a souvenir in Seoul, you just expect your card to work. That global acceptance? It's an incredibly powerful foundation to build on. And that global scale feeds directly into the second pillar, something called the network effect. It's this beautiful, powerful cycle. The more stores that accept Visa, the more useful a Visa card becomes for you and me. And the more of us that carry Visa cards, the more essential it is for every store to accept it. You see? It's a feedback loop that just gets stronger and stronger with every new person and every new store, making it almost impossible for a new player to break in. And the third pillar is that it's what's called an asset-light model. Just look at this comparison. A normal bank has to worry about you paying back your loans. That's called credit risk, and it's a huge deal. But Visa? They have none of that. They don't lend a single dime, so they frankly don't care if you default on your credit card bill. Why? Because they already collected their tiny toll the moment you made the purchase. It makes for a way safer, more predictable business.
So what's the result of all this? Well, the economics are just unbelievably scalable. Building that global network in the first place, that was the expensive part. But now that it exists, each extra transaction costs them basically nothing to process.
This means that as more and more people spend money, Visa's profits just skyrocket, which leads to some of the highest profit margins you'll find in any company anywhere in the world.
But of course, no company is invincible. So let's wrap this up by taking a look at what the future might hold for Visa. We're talking competition, risks, and opportunities.
Visa's definitely not alone out there. As you can see here, MasterCard is basically its twin. They have a nearly identical business model. Then you have American Express, which is different because it's both the network and the bank. They're the ones actually lending you the money. And then, of course, there's this huge wave of fintech companies like PayPal who are building totally new kinds of digital wallets, especially for the online world.
But even with all that competition, Visa has some really powerful tailwinds pushing it forward. The first one is the biggest, the massive global shift away from physical cash to digital payments. Trillions of dollars are still exchanged in cash. Every single one of those dollars that moves to a card is a win for Visa. Then you've got the explosion of e-commerce and the growth of the middle class in emerging markets. All of these trends are just pushing more and more transactions onto their network.
But it's not all clear skies. There are real risks. Governments can, and sometimes do, step in and put a cap on the fees Visa is allowed to charge. A global recession means people spend less money, which means fewer tolls for Visa to collect. And then there's the big one, new technologies. Things like real-time bank transfers or maybe even digital currencies. That could someday create a whole new payment highway that bypasses Visa's toll booth completely.
So if you remember just one thing from all of this, please make it this. Visa is not a bank. It isn't making risky bets on loans. It is the fundamental infrastructure, the actual rails that modern commerce runs on. It's a business that simply profits from the act of economic activity itself, all over the world.
And that kind of leaves us with one final big question to chew on. For decades, Visa and MasterCard have owned this global payments highway. But in this new world of disruptive fintech and new kinds of digital money, is it actually possible for someone to come along and build a new, a better, or maybe even a cheaper toll booth? Now that is the multi-trillion-dollar question for the future of money.